All right, welcome to you beautiful crypto mother lovers out there. No, this is not the AK guy. This is Crypto Wolf. And today we're going to be doing our first in-depth Market Cipher feature breakdown. And for this episode, I said episode. I guess it's not really an episode. I guess it's more just this video. We're going to be breaking down the VWAP and the momentum waves in Market Cipher B. And along with that, that's probably not going to take too much time. So after that, we'll take a look at the charts too. But we're going to stick to the higher time frames because this isn't a live stream. And, you know, things change fast. So we're going to keep it to the bigger picture for now. And yeah, so let's get to it. Thank you for joining me. All right, so what we have here actually is the Ethereum chart. Last time we did Bitcoin, figured I'd switch it up a little bit and use the Ethereum chart to break this down. And as you can see, down here at the bottom, we have Market Cipher B. We have our pretty little blue waves. Not quite the best to go surfing on, but could definitely go for a little ride, hopefully to some profit here. Obviously, we have our nice big money flow waves, but for right now, what I'm going to do is I'm going to turn off. What do we got here? I'll leave that. I'll leave that. Leave it, leave it, leave it, leave it, leave it. I'm going to take off our RSIs and our money flow just for now. So that way we can really focus on the VWAP and the momentum waves for this specific video. So, as you can see, personally, I like to have my VWAP as just a moderately thick yellow line. You do it too thick, you take out some of the fidelity, some of the high you know, it's kind of tends to round things a little bit if you make it too big. So, and if you have it at a 1 thickness, you almost can't even see it when you're zoomed out with everything on there. So I like to have my VWAP, I believe, a number 2 thickness, kept it yellow. And we have our nice big momentum waves. I know a lot of people out there like to get fancy with the colors. They got the blues and the purples going, giving it a real crypto feel, changing their candle colors. And honestly, I played around with it a little bit, and I may at some point play around with it some more. But I figured for the time being, since we're doing these videos, I wanted to keep it stock, keep it right out the factory. So it looks like what you guys are going to see if you first get it, and there'll be some familiarity there. So let's get into this. We'll talk about our VWAP first. Now, to give a little more info on the VWAP than I did in the first video, it stands for the volume weighted average price. And there is also a VWAP in Market Cipher SR, which is support and resistance. Now, it does not look like it's feeling me on the daily chart. Let's see here. There we go. Okay. So I didn't talk about this one in the first episode, and I guess I'll touch on it now since we're talking about VWAPs. Let me hide that a little bit. So this is Market Cipher SR, which also comes when you get your Market Cipher subscription. And this is what you'll see. Matter of fact, let me turn off A just to make it a little more visible. There we go. All right. And Market Cipher SR, support and resistance. Not that complicated. You have this outer, or these outer lines here, which are the highs and the lows for a particular trading period. I'm not sure if you can change what that period is. 15 no, I'm on hourly. I'm not sure, but I'm not gonna waste any more time on it. It's the highs and lows for each period here. Looking at this, it may be given like a little trend section, like, we're coming up, that's that one. Coming over, down, that's that one. It looks like it's starting and stopping at a particular juncture. I don't know. But anyways, so you've got your purple dots up here. We call it your purple line, which is your resistance. Your yellow dots, which is your support level. You have these blue dots here, which is the midpoint between your high and your low. And you have this white line. This white line is a more traditional VWAP, your volume weighted average price. And it's not exactly a not an EMA or an MA. It's not a moving average or an exponential moving average. Basically, it's taking an average of the prices with the volume factored in. So you can kind of see, like here we got this low volume, VWAP's really sticking in the middle there. Volume picks up a little bit, but it's still kind of hanging low because, again, it's an average. Here, a lot of volume pulls it down, a lot of volume starts swinging a little bit. But overall, we're not seeing anything too crazy. And I'll be honest with you, I am no expert. I've never even really used it before. I looked it up before doing this video just to see what the heck it was, and I could not explain the mechanics to you, but you can kind of see what's going on with it a little bit. And I do know that, typically speaking, and you can look this up on, investment and TA sites and things like that, that they say, basically just always short above the VWAP and to long below the VWAP. Clearly, short here, doing good. Probably close it when you cross. Again, starting to turn red above it. If you're short, doing all right. Is that, I don't know. It's not what I would be doing for trading. So we're gonna leave that at that. Not quite my cup of tea, but we're gonna come back down here to Market Cipher B and look at this pretty little yellow VWAP. So you can see that this tends to be one of those things that you really pay attention to, especially when it crosses. Because let's look here. So your VWAP's going up, going up, going up. It's peaking right here, right on this candle here. Matter of fact, hold on. We're gonna shake it down to a lower time frame here even. Start here. VWAP's down. It's at its lowest point. Is it necessarily the lowest point on the price chart? No. No, our lowest point's right about here. So what's that mean? Well, that means you're coming down. Now your VWAP's starting to head up. So you don't necessarily want to fire off a long just because you peaked at the bottom. You want to wait a little bit and watch. And when you get that cross to the upside, okay, now we're starting to pull up and out of it. And you can think of it like, the price is still going down, but if you look, we're not getting big candles. It's shortening up a little bit as this comes up. It's getting some resistance, or getting some support, you could say. But it's getting some upward pressure, and then well, we start capitulating a little bit, but it's coming down a little bit. It's more or less going sideways. And the angle and the curvature is something you really want to keep in mind, because like, here's a good example. Your VWAP came up, flatlined a little bit, up, flatlined a little bit, came up, starting to taper off a little, but still, price is generally pumping. Now, obviously, it's not just straight line upward. You're getting fluctuation. If I were to take this down to the 1 minute, it's bouncing around, from within that time frame in those couple candles. But now that we're starting to head down, yeah, I mean, it's Heikin-Ashi. We're still in the green a little bit, but we're pulling back. And what you typically want to see if you're getting good bullish pressure, here's a good example. It's coming down, which, we might have pumped all the way up here, came back to here. And it's a little bit lower, but we're still keeping this upward trend, which is where the Heikin-Ashis are nice. And if you look down here on the VWAP, we're coming down. Okay, we're getting a little steep, but now we're curving out. We're getting this nice curvature, almost even a little bit back to the upside. And you can see how that worked out up here on the candles. So there is certainly a difference between where it's coming down straight, steep, it's on its way. It's gaining that momentum to the downside. In this case, could be either. And then you see like this. Well, I'll come back to that in a second. Let's stay with these little sharp ones. Again, coming down, and then starts curving rather than just hitting a peak. We're still coming down, but it started to taper off a little bit right there, right when it started curving, and then continued on down. And you can see, even though that's just a little downward action, I mean, that was still 0.7%, which in the scheme of things isn't much, but we're really zooming in here. If this were a higher time frame, that could be a 5% move right there. So let's see, another thing to watch, aside from just the curvature and how straight it is these longer trends. So right here you can see it's got this longer downward trend, despite price being in an upward trend. So if we're going like this, we pump, pull back a little bit. Okay, we're still pushing. We're kind of pumping again a little bit. Pumping again. Okay, hitting a new high. All the while, this VWAP is damn near ready to break through. I mean, look, we are so close to pushing through the zero line. We haven't quite gotten our red dot yet at that time, but we've been up above zero for quite a while now. And you could go back and look anywhere along the time. Going to happen. You have your oscillations to pump it straight green candles for an hour or more. Well, hopefully you gotten along, because it's not happening very often. Maybe during super FOMO, but you see this downward trend. You should know around here at the latest when you get a red diamond like that. But we also have something else to be looking at right here. As I crappy circle. So and that's kind of how Market Cipher works. Is you don't want to just rely on one indication. You want to have like confirmations across multiple indicators. And by indicators, I mean, your VWAP, your momentum wave, maybe your symbols up here, your heights, how far it's going, or how small a wave might be. You want to have multiple things backing up what you feel is going on. And then, on top of that, we can expound on, you also want to see confirmation on multiple time frames depending on what kind of trade you're looking to do. If you are just looking for a quick scalp, I mean, you could pull a nice little scalp on the 10-minute right here. That would have been a pretty beautiful trade. I mean, this one right here, you probably could have gotten nervous because it pumps all the way up there and pulled all the way back. That's where keeping emotion out of it can keep you in what would be, twice as good, if not more, of a trade when most people would be freaking out. Because let's say, ignore this. Let's say, okay, got your little doji star, you're starting to come back up again. You get this nice curvature, it's coming back to the upside. So, all right, I'm going to fire off a long, momentum waves crossing. It's looking nice. Fire off a long, you're coming up. You're flipping over to the smaller time frames. You see this thing come up, and then it's pulling back, it's pulling back, it's pulling back. And a lot of people, whoa, close it. Or maybe you're pushing your stop loss up, like up closer and closer, just to almost do like a trailing stop loss. And let's say you stopped out here. I'll be generous. I don't know how fast this one was moving, but it's a 10-minute candle, so it had a little bit of movement to it. But let's say you stop out here. It pulls back a little bit more wherever. Comes in on the next candle. It's it's going up, and maybe it's kind of stalling. Maybe it came down a little bit, moves to the next candle. Okay, now it's slowly starting to come up, and you're sitting there thinking, oh well, VWAP's coming down. You're only seeing part of this. You're thinking maybe this thing might roll over, so you stay out of it. By the time it gets up here, you're sitting here thinking, crap. Like, well, you're looking at it, we're getting a little bit further up here. This is getting close. It's too late to be re-entering. At that point, you'd just be flopping and groping. So, where you cut here, let's say pulled off a 1%er when you could have pulled off, I'll be generous, a 2%er. So, double the trade because, you're letting the emotion get you when things started to pull back a little bit, even though it was still decent. I mean, it was starting to roll over here a little bit, but that wasn't until after. I mean, these momentum waves were still looking up. This was coming down a little bit, but if you wait until you cross the zero, you would have been out here in that 2% range. Because look, and this happens, it comes down. This didn't even bounce off. It repelled like a magnet, stayed up for another, 20, 30 minutes before it finally crossed back through. And so that's where trusting the chart, trusting the indicator over that voice in the back of your head that is watching your unrealized profit, where it's like, oh, hey, yeah, I was just had $100 profit. No, it's pulling back. Oh, damn, I'm down to 50. I'm down to 60. Like, man, we better cut this before it gets worse. That voice is the worst thing that you could do. I mean, you got to have patience with it. I mean, we're talking hour and a half trade that you might have cut after 20 minutes. So just things to keep in mind, particularly when, you know, watching these VWAPs. I mean, and if you're honestly playing it the way that I typically like to, I would have been trying to start right after this thing crossed. Because, I mean, look, we probably didn't make it up on this candle, but within this candle, we crossed and came up a little bit. I mean, that would have been the ideal time. So let's look. If you would have got in on here until it crossed back, let's be generous and say it was about there. Yeah, like 2.4%. You know, almost gained you an extra 0.5%. If you would have, you know, if you pushed it pretty close, you could have got that 2.5. I mean, that's, you know, better than the 1%. Not to mention, a little less stressful. Better for your mental health. Flopping and groping, man, it's got to be taking years off your life. Because I'm telling you, I've been there, I've done it. It's stressful. And it's not fun. It's not enjoyable. And, you know, if you're going to be doing this to make money, or doing anything in your life, better to enjoy it. Better to be good at it. And here's a piece of advice that I've been told that I really liked, and it really stuck with me. And that is, trade like a bot. You know, it doesn't have to be every single time, but more times than not, if you take your emotion out of it, take yourself out of it, figure out your strategy, and stick to that strategy. For example, let's just say you're being super simple, don't want to look at nothing else. You hide everything else off the screen except this little yellow VWAP line. Entered on the cross, exit on the cross. How much better off would you have been than just trying to wing it? I'm willing to bet decently better. Now, it's not going to be a big winner every single time. Look at this. Okay, let's say you turned right back around and shorted. Where does it cross back? Right about here. 0.5%. It's not a loss. Okay, so, well, you made 0.5% on what was basically kind of an trade. It was a meh. Came back around. I mean, you can go up and down the chart checking this out. This is an interesting case because it comes up and pulls back a decent little bit before crossing back over. 0.5% in the other direction. Now, if you're flipping time frames, say you got this trade going and you're pulling back to the 4-minute, and I don't even think this is the same time, but you know, you're pulling back to a lower time frame and you're watching this. Yeah, you probably could have cut out a little bit higher. You know, you flip to that one, especially if you're seeing similar signs between the time frames. You flip to that one and you're watching the VWAP on that one. You're watching the momentum waves on that one. So, let's look over here. You know, you get some of these little sharp spikes. I mean, I'm basically looking at what's been happening very recently, and it is not the greatest example because things are kind of chop suey. But let's see. Here's an interesting. Is that the one we were just looking at? I don't know. Maybe it is. Let's just flip to a random. Hit up some rando. What do we got here? You know, this coveted crash trade right here. Look at this short. But let's take a closer look in reality here. What do we got? So, potential trigger wave. Sign number 1. We got VWAP barely spiked down and ran back up, but came up. Price is not doing a hell of a lot, really. And we got steep declines. That means the price is running. You know, it's not a gradual like this one. Got a little curvature. It's gradual. Still got some bullish strength. But then you get these steep shots. I mean, some of them look practically straight down. Like this guy's fairly steep up, but it kind of started tapering off right after the cross. But still, wasn't terrible. This guy here, steep little peak. Gonna have to get your belaying buddy to climb that sucker. But alright, so we got this steep shot. Came down. VWAP maxed out. We're still up here. We're still up in the low oxygen territory. Coming up. And these are the ones that are weird, that you kind of have to watch for. Is where you just kind of crisscross over and back over. And this is a great example of why you don't want to act the second you see something. Typically they say wait for confirmation. Some people say wait till the candle after. The candle after the crossover, which is a safe way to do it. Are you going to maybe lose out on some, like a little bit off of trades? Yeah, there's a good chance, But trying to hit the exact top and the exact bottom, the perfect entry and the perfect exit, is a hard thing to do. And oftentimes it's going to lead you to maybe making the wrong decisions, being emotional about it. And it's very well possible. And there's other things too that, we're not getting into yet with support and resistance levels, Fibonacci retracements, patterns. There's other things that can kind of help you in that department. But again, keeping it simple, focusing on this specific indicator. And we're watching. But, for all intents and purposes, it bounced off. Comes back. Okay, right here, now we're finally crossing back over. Where are we at? Right here. Still had a pretty big dip, after it turned right back around. Then just this little bump below zero here was a third of the entire dip. But had you gotten out here, if you were just mechanically trading like a bot, you still had a good trade. And that's one of the most important things, is to take your profits. Because let's face it, you got this 4.2% right there, whatever leverage you're doing. Say you tried to ride it out. Yeah, in this case, you probably could have, even if it bounced and then you saw it, you probably could have caught it right there. This is one of those cases where you're not knifing down and shooting right back up immediately. But those times definitely happen. And there's other times where you come down, you come up, but it's kind of weak. You're coming up, bouncing back down, coming up, bouncing back down. And you're thinking, okay, well, maybe it's like this. We're just going to do a continuation. We're going to continue on down. Maybe it's going to be a double bottom. And you end up waiting. Now you're like back up in this territory. You're like, oh, crap, it hasn't come down back yet. You're looking over here. You're getting just short little waves underneath. Even a little bit of angling upward here. What would have been, let's see, even this mechanical one here, trading like about 1.5%. You hold out. Sometimes it comes up, but nothing's exactly the same. There's really no perfect answer. But if you want to play it safe, if you want to try to be mechanical about it, you figure out your strategy and you stick to it. Because it's once you start deviating, once you start, flying by the seat of your pants and overruling yourself, that's when your discipline goes out the window. And before you know it, You're going to be flopping and groping. You're going to be just not taking profits when you should, and it's going to turn on you. Or that's probably the main one that's going to happen. But and it does, and it happens to everybody. But let me know down there if you guys have any questions about the VWAP, if there's anything else you want to know. And you can kind of see it's just, it follows the price action, and it is weighted by volume a little bit. It's not springing all the way up here, so it generally stays in this range. Here you had a pretty big move up here. Not terribly, but that doesn't necessarily mean that there wasn't a lot of action going on, so to speak. Because, you could have, even like here, you could have a ton of volume and very little movement because, the order book split, kind of going equal pressure both ways. Not really equal, but you know what I mean. Now, let's talk about momentum waves. Now, these are nice because there is a lot you can do with these, particularly for gauging the direction beforehand. Like these ones are good at predictive indicating, I think I'll say. I'm gonna make up my own phrase here. The momentum wave predictive indicating. Trademark, you heard it here first. 1 second. All right. So, breaking down the waves themselves. Dang it. Quit doing that crap. All right. Zooming in a little bit here. So you guys can see. So, obviously, we have two separate waves overlapping. You have a dark wave and a light wave. Kind of like your foamy froth at the top of a nice little funnel wave. Just trying to surf that bad boy right down. But what you can see is, and in the little tutorial guide, it says that one of them is, hold on, I got this written down, let me see. So the light wave is like a leading momentum wave, and the dark wave is a lagging momentum wave. And basically they're just giving you like strength and direction. Direction being the key word there. I mean, the strength, it's important too. I mean, you definitely see where, we're coming up above the 60 line here. And technically over the 60 is, overbought. Down here below the 60, oversold. And to give you another little insight here, this dotted line at the 50, I guess is set up as like an alert trigger line. Now, I haven't actually played with the alerts too much. I think I did set an alert a while ago, and I haven't really used it. It's something I do want to get into though. And so I think what we'll do a whole video on setting up alerts through using Market Cipher. And because I know it does have quite a bit that you can do as far as like the TradingView alert system actually utilizing the Market Cipher indicators. So we'll definitely dig into that another day. But if you look at this, you see, okay, well, we kind of peak on the leader, whereas the dark wave, the lagger, kind of sounds stupid, but lagger, the lager wave, it's made of beer. is kind of more rounded off. And what I've kind of noticed is, this light wave can be a little bit closer to price action that you are watching. Like here, it's coming, it's kind of spiking up, spiking back down, spiking up, running back down. And you can see where it crossed the overlap on the dark wave and it's coming down. So when you're, in the moment here, let's get into live territory. All right. Do that the right way. You can see what it really looks like. And obviously you're trying to kind of guess and predict where it's going here. Now it can be a little tricky sometimes because you're coming down and that's all you would see where that dotted line is. And it seems like it's just going to keep continuing. But the thing you got to watch for is see where it starts curving in. And even here, it starts tapering in a little bit. Taking that in conjunction with the other indicators tells you that it's starting to weaken. That downward pressure is starting to weaken. It's pulling back in. Your VWAP's starting to pull up. So if you were only looking at the momentum wave, let's say like that, at that time, you might be thinking, okay, it's going to pull this. It's going to come down. We're going to get a nice big round wave. Maybe you've been shorting or thinking of shorting. You're looking at it to start coming downward, and then pow, this thing just starts shooting straight up. That's why you want to look at multiple indicators, because you're seeing this VWAP come up, even to here, just this candle right here. You're seeing it come up, even though price action's still kind of in the red, although you got, this wick, it is starting to pull up. So, that was your V right there even. And by then, maybe you're getting ready for this VWAP cross, which presents with that green dot, from the last video, crossing upward, green dot. Now this is interesting. It's crossing downward. Okay, so it didn't quite cross on this candle yet. It wasn't until this candle that it not only crossed, but came down fairly substantially. And that's when you got your red dot. Now, the next important aspect of the momentum waves is looking at trends, if you will. And that's where divergences come in. Not that this isn't one, but you can see we have this upward trend, again, upward trend. Not that that's telling you much, although you can also see these higher lows in the momentum waves. If you kind of wanted confirmation that, maybe this was going to continue to go up. Oh, and another throwback to the last video. So these triangles are early warnings of a trend reversal. So it might not be right when the triangle hits, maybe a little after. In this case, it was pretty much right after. And if you get the green dot after the triangle, it generally is a bullish sign showing continuation. But here's the caveat that I did not remember in the last video. You want it to be taken in conjunction with the next 3 candles after the green dot if you get a red diamond within the next 3 candles, it basically invalidates that green dot. If you get, let's see if I can find an example here. I guess if you get 3 yellow diamonds, it kind of confirms that trend continuation, particularly to the bullish side. And in here you can kind of see it. I mean, it's choppy. It's not the greatest, but it did continue upward. Again here, continued upward. We actually have a diamond forming right now, or a triangle forming right now. So I guess we'll check back with this. There we got 1 yellow diamond. Yeah, VWAP tapering off a little bit. Momentum wave still early. Here we go. Okay, another print. You can see that VWAP action coming in here as that candle got a little bit weaker. Starting to get a 4 on the DBSI, so we're starting to get a little bit of strength on the bearish side. A little bit of selling pressure. Don't have... Okay, we still got a continuation diamond here, but it could kind of go either way. You know, it looks like, hard to see, I think we got a 6 down here. It could still keep going. I mean, it absolutely could. It's still momentum waves generally trending up, but it does have a little bit of taper. But if we were to get some more buying pressure, a little bit more volume here, that could push this up, and that's going to send that wave going up even further. I mean, you can see this is not steep. You know, it's fairly similar to this. Whereas that continued, even though it didn't continue any way strong. I mean, we're not, getting these nice long candles here, but it continued. So we'll check back, see how that does. But I want to find, and I know we touched on divergence in the last video a little bit, particularly on the high time frame with, the previous market top, which is honestly a really good example. Nothing great right there. I mean, price is going down, waves are going down. I mean, right here, even still, price is kind of going down with that. Let's bump up a little bit here. We'll level up. Okay, so we have a little bit here, so you can see price is coming down, price is coming down, price is coming down. We're getting lower lows, but we did get higher lows on the momentum wave, and it did go up a little bit. Not a heck of a lot, but if you're, is a half-hour time frame, if you're hungry for some swing trades, you could have slid a little something in there. Came right back. A little bit. I mean, you could, if you're looking in real time, that's just going up with the price. Let's see. Give me a good one. Give me a good one. All right, price is going up a little bit. Momentum waves. Got divergence to the downside. You can see it through here. See it here, even extended out to here. And you can see this divergence back here. We did get one more little pump, but it sure as hell came down after that. Seeing it that way. Right here, it was coming down. Starting to see a little divergence here. Had a little bit more to come, but it's still starting to trend to the upside. Didn't amount to much, but it didn't. Yeah. These momentum waves, I mean, when you zoom out, it really gives you a view of like the overall direction. I mean, this one's fairly obvious, but let's say you're here. You know, you're down here, did it out the mud. You're starting to see this. Okay, you're getting a little hope. You know, you're sitting there, you're starting to sing out my window. Because you're looking, you're like, it's coming. I think we're moving up. We're moving on up. Hit this low. Still higher on the momentum. You go long. Could have been a beautiful thing. Could have been a beautiful thing. 16%er. You know, that's a good example right there, where you can clearly see the trend. What the hell? Wow. All right. You know, you can clearly see what was starting back here. Oh, you know what? Another thing somehow I forgot to mention in the last video. Lord forgive me, because everybody loves this one. The all famous green dots. Everybody knows BitBoy loves his green dots. And I suppose we all do. Now, what's so special about these green dots, you ask? Well, in this case in particular, this happens to be a double snake eyes. Two of them next to each other, that's your snake eyes. 4 dots near each other tends to signify the bottom. That, you know, because these green dots are supposed to indicate that it's hit a local bottom. And as you can see, it doesn't necessarily mean when you get one, it doesn't mean, okay, we're done, fire off along, we got our green dot. You would have got wrecked. I mean, clearly, obviously, big wreck. But came in, hit the second one, and even still, let's zoom this a little bit. Green dot printed back here at the VWAP cross. Remember what we said about the VWAP? It's not 100% like everything else. You could trade it. This one might have been rough, but if you would have stuck to that trade like a bot strategy, you would have hung in there and then, waited it out. It'd be going up. Again, not the greatest going up, but let's say you went in on the green dot. Still 2.2% in what potentially would have been a loss had you bailed after it was going down. And understandably, that would be a little bit of a nerve-wracking trade, won't lie. But, your momentum was still coming up. Your VWAP was still coming up. It's one of the rougher ones that at least there were signs there that would kind of keep the faith. Be hanging in there like, all right, come on. I see it going up. I see that VWAP. Like, come on, baby, play out for me. And even if you would have, bailed in here, probably at least would have been a break even. Because granted, it's nothing spectacular here, but you've seen this coming back down. This is a rough one for the trade like a bot thing. And again, and just like I'm trying to think where I heard this. It might have been Flop and Groper. I think it was him. And he'll tell you, like anybody else will tell you, it's not 100% profit every single time. It's not every trade is going to be a win, which takes you back to risk management and trading responsibly, because you could have all the best signs in the world, and some of them are just going to go against you. That's just the way it is. That's why if you stick to a strategy, having a 70 or a 80% win rate is a damn good win rate. Now you're coming out net profit, but at the same time you are minimizing your losses. You're not FOMOing. You're trying not to stay emotional. Trying not to get emotional, really. And as a result, because let's face it, you can think you'll be the best in the world, and you're like, I can read the signs, I can read the charts, I can read Market Cipher. I'm gonna trade with my gut here. And there's so many cases that I've seen from people, and even experienced myself. You're looking at oftentimes it's a 20% win ratio. And so many people, you go through and talk to some of the people in the community, like a lot of people have experienced getting wrecked. And they've, gone from, 10K, 50K accounts down to damn near nothing, and had to build their way back up. And so, it's those lessons that I took to heart, and I try to listen to, because I'm like, all right, well, this dude's been through it. He's felt that pain. I don't want to feel that pain. So I'm going to not be an idiot. I'm going to listen to him, and I'm going to take his advice. I'm not saying to take my advice. I'm just telling you the advice that I was given. Again, I'm not an expert at this. I'm not an OG. I'm still, I consider myself kind of a newbie still. But I'm trying to listen to the good advice. I'm trying to keep to those strategies. And I figure if I'm preaching about it on here, then I damn well better stick to it. Otherwise, I'm just a damn hypocrite. So I don't want to be a hypocrite. So it's helping me just by trying to help teach everybody else. But yeah, that's pretty much the gist of the VWAP and the momentum waves. I'm sure there's a little bit more. There's always a little bit more. As far as divergences, you got bullish divergence, bearish divergence, which can be, a little bit different. You also have your hidden divergences. I am not a damn expert on hidden divergences. I'm going to try to brush up on it a little bit more. And I may do the next video on that, just to kind of stay in this lane a little bit with the momentum waves and such. And I do have a nice little chart, because I know all my crypto nerds out there, you like your charts. Don't lie. I won't. I like them. Whatever. Yeah, it helps visualize it a little bit. So I think what I'll do is I'll bring a nice little divergence chart on here, and we'll take a look at it. We'll go into the charts, try to find some examples, and we'll all get to be a little bit better at trading. And we'll try to make some money. And eventually maybe we get some life-changing money. Maybe we get to tell our bosses, see ya. Or maybe not. I don't, that's, I'll just say this one too. Don't throw away everything and be like, I'm going to be a day trader. I'm going to be a professional crypto trader. I don't need this job. I just keep whatever source of income you have. Oh, look, there's a divergence right there. But, keep the source of income you have, and use that to put money in your trading account and just go in with the expectation that everything could crash tomorrow. You know, China could call in our debts. You know, the supply and shipping could just grind to a damn halt, and everything goes crazy. Grocery stores are empty, and everything tanks. You never know. I mean, honestly, it's more likely nowadays than it really has been in a long time. So go in with that expectation that the money you're putting in your trading account, you could lose it and you're not going to be homeless. You know, you're still going to be able to make your mortgage. You're still going to be able to do the car note. You can still get groceries because, you know, trading doesn't mean anything if you don't have a house or internet. I mean, I suppose you could go to Starbucks and be trading, you know, with the muckety mucks and the yuppies, but no offense, no offense. But yeah, so, you know, be smart, be responsible, practice risk management. Shit, I should probably do the next video on that, to be honest, because I know a lot of people are out here flying by the seat of their pants doing these 50x, 100x leverage shots. I mean, yeah, you can make some money with it, but you should never be getting liquidated. I mean, that is a rule I hear and a rule I stay by. You should not be putting yourself in the position that you could get liquidated. I mean, as particularly, you know, with just a swing, because, I mean, dude, you know, I remember I was watching CryptoFace live when, you know, we had, what, maybe was it this one? Like, I remember I was watching when we had some of these little flash crashes. And I mean, certain exchanges, I think, what was it, Binance.us? I mean, dude, I think it was on Bitcoin, though. It wasn't on ETH. But, dude, the candle went down to like 20K or something like that, like 18K. It probably liquidated so many people. And you got to keep in mind, too, just setting a stop loss isn't 100% going to save you. Because when something like that happens and you have this cascading stop loss effect and cascading liquidations, what happens is if there's not people there to buy it, it's going to do a market sell to, you know, whatever the next closest price somebody's going to pay for it. Well, if you have a large gap that nobody's buying, it's going straight down to the next one, dropping that candle even further, even faster. And that's why you get these, you know, super sharp knives that cut right down, because it's blowing past people's stop loss. It's not selling at that price that you set that stop loss at. People are getting wrecked. People are getting liquidated. And it just drives it even faster. So, again, risk management. You know, don't bet the whole house on a trade. Don't bet your whole account. You know, I know most people saying that, you know, they try not to trade more than like 2, 3, maybe 5% of their account. Yeah, I'll be honest. That wouldn't get me shit. I don't got money like that. So, yeah, I'm doing more percentage of my account, but I'm being damn careful with the risk management that I am doing. Always, you know, setting a stop loss, because, you know, half the time I'm not at home sitting in front of the computer. If I got to do this at work or on the phone, well, which is the same thing, I got to do it on the phone if I'm at work, then, you know, I got to have that stop loss set. And I'm usually not setting it so far away that I expect like a little flash crash to, you know, to get me knocked out. But yeah, just be careful. And I'm wrapping this one up. Remember, life is short. Enjoy it. Live it to the fullest. Push it to the limit. I shouldn't say that. I used to do that. That worked out terribly. Be smart. And have a wonderful day, and I'll see y'all back soon.